Southeast Asia's most valuable startup, Grab, is seconds away from being listed on the Nasdaq. The deal is the largest SPAC listing globally, worth close to 55 billion Singapore dollars. And for more, we're joined now by Lisha Rodney, who is at Grab's bell ringing ceremony. Well, this is going to be a long-awaited moment. What is the atmosphere like now, Lisha?
The atmosphere is amazing. You can hear the claps, the cheers, the excitement in the air. That's it. Grab's finally listed on the Nasdaq. This is history in the making. It's finally happened. Grab is officially listed on the Nasdaq. In this ballroom with me, there are Grab employees, drivers, delivery riders, corporate partners here to celebrate this very special, significant milestone, not only for Grab, but for many tech companies, many startups in this Southeast Asia region. Now, Grab CEO Anthony spoke earlier and he said this is the first of many firsts that they will make history in the Southeast Asia region. And for context, through this deal, Grab will receive $4.5 billion in cash, including $4 billion through private investments by companies like Temasek Holdings and BlackRock. Now, analysts I spoke to say the road ahead for Grab is bright, but now that it's public, it's going to be closely watched by investors. Its quarterly results will be scrutinized, and the company has to deliver.
Well, thanks for that, Lisha Rodney there. Now, for a closer look, we go to Daniel Ives from Wedbush Securities now. Well, Daniel, this virtual bell has rung, and we will soon know the opening price. What are your expectations for Grab's Wall Street debut?
Look, I think this continues to really be the best way to play that Asia market from a mobile perspective, ride sharing. Grab's a stalwart, and this has really been a long time coming. And I think it just speaks to the appetite for more investors around the world to play the Asia angle, especially as Grab's really become the gargantuan there.
Well, this is, at $40 billion, this is the biggest SPAC listing to date. But are there any downside risks for investors of the IPO?
Look, there's always risk coming out of these deals. And as your colleague talked about, it's about execution going forward. But if you look at a lot of these companies, now they go on the offensive. They have capital. It's about M&A. And then they really become that pure play way. And now it's about consolidating the market and executing. And if you look at this broader market, there's a scarcity of core growth stories, especially ones to play the Asia market. Look what we've seen what's happened with China tech stocks, which have gone the wrong direction. And I think that's why Grab, it really becomes a situation where they're front and center.
Yeah, and what is, the greatest significance of this listing for Southeast Asian tech companies?
I think it's the start of many. I think you're really starting to see just massive growth come out of Indonesia, Vietnam, and of course other parts of Asia, because this is really a fourth industrial revolution that's playing out. Now, Grab is tip of the iceberg, but I think it just speaks to a broader theme that we're going to see over the coming years in terms of not just on the capital market side, but I think it just shows investors' appetite both in the private and public markets.
Yeah, and Daniel, how do you see investor appetite for Grab as a portfolio compared to, say, other potential unicorns with their own plans to list in Wall Street as well?
Well, it specifically becomes a play on Asia, and that is a huge advantage for them. Even if you look at names like Uber, tangentially, that's obviously a global play. It's that's had its share of challenges, and I think for Grab, the big focus is going to be any sort of regulatory issues in terms of different countries that they're seeing in the monetization. But for right now, it really becomes a stalwart play in terms of e-commerce monetization, especially it's a watershed day in terms of playing that Asian market.
Well, then at the same time, Southeast Asia's late-stage startups are now attracting a growing interest from SPACs. What is the scope of growth for such mergers here in this region?
I think it's selective. I think it really comes down to, not all stores are going to be able to do it. There's a scarcity of growth names that are executing. That's what investors want to see. It's been a choppy market in terms of from many companies that have come out through the SPAC, but it needs to have a secular theme, whether it's e-commerce, whether it's electric vehicles. And I think you're starting to see a little more scrutiny in terms of those names that the public markets want to see.
Well, thanks for that. Daniel Ives, Managing Director of Wedbush Securities.